arguably the best stock in the stock market. We have Elf earnings on deck, arguably the best stock in the stock market. And we also have Snowflake, which should be very interesting. So this is a grand finale, folks. This is the last live stream of this earnings season. And you won't see me on Twitch for probably another month and a half after this. It's a bittersweet, right? So these are three big dogs reporting after the bell. Nvidia, Elf, and Snowflake. Nvidia and Elf are respected as arguably the best stocks in the entire stock market. These are absolutely incredible performers. Elf definitely is my best performing stock of all time in terms of percentage gain that I actually held through for that entire percentage gain. Nvidia, if I wouldn't have traded in and out of Nvidia over the years, Nvidia might have been my best ever, but unfortunately, I took short-term profits on Nvidia years ago. Bad decision. Such a bad decision, but anyways, can't catch them all, I guess. Life lessons you learn. When you own the great ones, you stick with the great ones. You let them be great. So in terms of Nvidia, what we're looking at here, Nvidia. So Nvidia, in terms of what expectations are, 558 is what analysts are at here, 411% growth, which I know is insane, but they could probably put that up, to be honest with you. So 558 is what's expected on EPS, and then next quarter, $6. Okay. Now, in terms of this current quarter, 24.5 billion is expected from analysts, and then almost 27 for next quarter. Now, it's important you guys understand, it's not just, unfortunately, this is even a more complicated game than usual. Usually, it's just about what are the numbers, what's the guide, or can they beat those? With Nvidia, it's even more complicated than that. With Nvidia, we're dealing with a situation here, folks, where Nvidia also has to beat the whisper number. Now, the whisper number is around $26 billion for this quarter. So basically, Nvidia is expected to not do really 24.5. If you really want to think about what could blast Nvidia stock higher, they need to have a guide well above 27 billion for next quarter. And they need to beat 26 billion actually in reality, because that's the whisper number. So this is where you get in a very complicated game of, will the stock price go up? Will it not go up? And I was explaining on the reaction channel earlier, this is a big game of musical chairs also is being played here in regards to Nvidia stock, where essentially everybody's wondering where roughly the top is for the business, right? And they're like, where does this company top at for revenue per quarter? Is it 30 billion? Is it 28 billion? Is it 32? Is it 34? Is it 36? Is it 40 billion a quarter? Everybody's trying to figure that out and playing this game of musical chairs, and they get out of it because they're like, maybe this is the top and it's going to be the top, right? Or maybe the top's next quarter. So it's a big game of musical chairs everybody's playing in regards to stock. So you just got to understand all the dynamics that are playing in the short term in regards to stock and what can move it up or down. So if Nvidia stock goes down after hours, it doesn't mean Nvidia is a bad company or like, no one cares about Nvidia anymore or something like that. It could just mean they missed their whisper number, right? They came in with 25.5 billion, which will still be $1 billion beat, which is great. But if it doesn't beat the whisper number, maybe it's, short-term Wall Street folks sell out of it. You got to understand the games that are being played here, because there's a lot of games being played. Now, the interesting thing is, look at the lowest company as far as forward PE. It's actually Nvidia. The one that's talked about the most is actually the lowest forward PE, believe it or not. Which, the way sometimes people talk about Nvidia, you think, oh my gosh, it must trade at some insane forward PE. Really, it's trading about double where the market trades at roughly, right? Which is not crazy considering, is this company growing a lot more than double the market? Yes. It's not even remotely close. Are they growing? We're talking about, this is a company growing earnings per share this year 400% plus, right? The average stock in the stock market is growing single digit earnings per share growth, so meaning less than 10%. And this company's grown over 400%, but yet it's trading at only roughly double the forward PE. Which once again kind of shows the game of musical chairs and people trying to think like this is a top for Nvidia and these sorts of things, right? That's incredible. Absolutely incredible. Now, you also look, even though Nvidia sells actual, physical products, the gross margins are the best out of these companies, which shows you how damn good Nvidia and Elf are. Think about it. Snowflake sells basically a software, right? We can put it into that category of like a SaaS business, right? and their business model differs a little bit, but at the end of the day, they're selling a digital good, right? Elf and Nvidia are selling actual physical goods, right? Like cosmetics products for Elf, and Nvidia, it's actual physical chips. And yet, both those companies have higher gross margins. That's insane. I mean, it's ridiculous. The fact that those companies have over 70% gross margins and they sell physical products is wild. Wild. Now, Elf has a lot of room to grow that net margin over the coming years. They've been spending aggressively because they're in a major growth cycle right now. So, the net margin will catch up long term, and they can probably take it to a 20 or 30% net margin, especially when you're commanding 70% plus gross margins. But, they're just trying to capitalize on the long-term opportunity here at this company. Now, in terms of Elf here, for what their expectations are after the bell, it's a very uncertain move with Nvidia. See how the stock's not really moving up or down into these earnings? So we go to the quarterly estimates here. So these are what to remember for Elf. 33 cents EPS here, okay? But the next quarter is probably what matters even more. $1.26 next quarter, okay? Which would only be 14% growth year over year. Not very much. Now, as far as revenue for this current quarter, 56%. And then here's where things get interesting. Oh boy! Oh boy! Analysts have Elf only growing 37% revenue next quarter. Now, that matters significantly because understand Elf has been growing 70 to 80% revenues recently. So if they slow down 37%, that's a massive deceleration. Obviously, still 37% revenue growth is great. But there is potential that maybe analysts are a little too bearish in regards to Elf numbers, and maybe, just maybe, they're going to post better numbers than what's expected here. So just a little food for thought. But look at the deceleration. 56% for this current quarter they're about to report. As far as the guidance goes, 37% expected. Then the following quarter, 35%. Then down to 20%, right? So I don't know. Maybe analysts are right, or maybe they're just a little too bearish in regards to Elf on a shelf. And if they're too bearish, look out. Elf's going 200 plus. It seems like everybody's nervous about all these stocks going into these earnings. I mean, these it probably has something to do with the day, the trading day too. The trading day is a very nervous day out there. You see there's Red Dead Redemption all over the place. Some big falls in some of these housing stocks, right? And so naturally going into these earnings, I think people are cautious. I don't want to say they're bearish. They're not bearish because if folks were bearish on these stocks going into these earnings, I mean, you would see Snowflake down, 3-4% right now. You see Elf down 3-4%. You see Nvidia down 3-4%. So they're not really bearish, but they're not really, I wouldn't say they're necessarily bullish going into these earnings either, because none of these stocks are making upward moves. They're kind of a little nervous and like, let's just see. And then they're going to wait to make their moves till after the earnings come out. And, if they go bullish, they're going to be really going bullish. If they go bearish, then we might not. I think I will say there's probably more. If the stocks go down, the move will be somewhat limited, I feel like, because a lot of people have already taken profits in these stocks, right? You hear it all the time. Yeah, I sold it, it's made a big run, blah, blah, blah. If there's an upward move, I think the upward move could be very substantial because I think there is a lot of sideline money with some of these stocks that are kind of just waiting to see the numbers. If the numbers are really good, the guidance is good, the conference call is good, they're going to buy these stocks up. And that goes for Nvidia and that goes for Elf. I don't really want to speak on behalf of Snowflake. That's a little bit of a different story. But in regards to Nvidia and Elf, if they come through with great numbers, great guidance, great conference call, I can tell you there's going to be a lot of money moving into these stocks over the next week. A lot of money.
Okay. Well, speaking of earnings, we're starting to get some other results. We've got VF Core, Snowflake, and Synopsys out. We're going through those results. In the meantime, Julia Borston has the numbers for Elf Beauty.
There we go.
Julia.
Thank you.
That's right. Elf Beauty beating expectations in the top and bottom lines with adjusted earnings of 53 cents per share. That's higher than the 32 cents estimated. Revenues of 321 million, surpassing expectations of 292.6 million. And net sales did grow 71% year over year, which the company says was driven by strength across retail and e-commerce channels. But take a look at that stock now, trading down 11%.
They're gonna fucking buy it up.
Trading, and that is on weak guidance.
This shit doesn't matter.
The company
It's fucking going to 200 plus.
Full year revenues in a range of 1.23 to 1.25
going to 200
billion
plus.
That is below the consensus of 1.27 billion. And the adjusted earnings outlook also falling short of expectations. The company giving a range of between $3.20 and $3.25 a share, well below consensus guidance, consensus expectations rather of $3.51. Shares now down about 12% in after hours trading. John?
All right, Julia, thank you. Meanwhile, heading in the other direction, Snowflake, those earnings are up and the stock is higher. Seema Modi has those numbers. Seema.
Anybody that sells Elf stock, they're a little slow.
Missed on its bottom line. It did produce better than expected revenue growth of 33% year over year at $829 million, which did come ahead of Wall Street consensus. The company also outlines that it's seeing more C-suite demand, 709 Forbes Global 2000 customers versus the 691 it saw in the fourth quarter. The new CEO, Sridhar Ramaswamy, who investors are looking forward to hearing from on the earnings call, really touting the company's push into artificial intelligence, saying our core business very strong, our AI products now generally available are generating strong customer interest. They will help our customers deliver effective and efficient AI-powered experiences faster than ever. This is the cloud data management company that brought its expectations down for 2025, which sent the stock down about 30% over the past 3 months, now getting a bit of relief here in overtime. John and Morgan.
All right. Yeah, I mean...
Really? So let's look at these Elf numbers, okay? So delivered over $1 billion in net sales, up 77% in fiscal 2024. Elf Cosmetics gained market share for the 5th consecutive year. Revised 2025 outlook. Fiscal 2024 marked our strongest year of net sales growth on record, a continuation of the exceptional and consistent category-leading growth we've delivered, said obviously CEO of the company. In Q4, we grew net sales by 71% and expanded, that's a huge beat, and expanded our market share by 325 basis points, marking our 21st consecutive quarter of net sales and market share growth. As we look ahead, we believe we are still in the early innings of unlocking the full potential we see for Elf Beauty across cosmetics, skincare, and international markets. Yeah, international is like a crazy big opportunity for the company. I mean, if I look out 5 years, the international segment should dwarf the North American segment. Net sales increased 71%. Gross margin, I don't know how they keep bringing up this gross margin, but they do it. Gross margin increased another 180 basis points to 71%. Jeez. Favorable foreign exchange, international price increases, lower costs from retailer activity, cost savings and mix. SG&A increased $89 million, 65% of sales. Net income, $14.5 million on a GAAP basis. Adjusted net income was $30.8 million. Diluted EPS, 25 cents on a GAAP basis, 53 cents on an adjusted basis. Net sales increased for the full year 77%. Balance sheet, they ended the year with $108 million in cash and cash equivalents, $161 million long-term debt and finance lease obligations. They did this big acquisition back in October, which took a lot of money. They did that $333 million in a combination of cash and company stock. So something to kind of keep in mind there. Fiscal 2025 outlook. So they're guiding for 1.23 to 1.25 because now their fiscal year 2024 is over. They're going on to their fiscal year 2025. Now Wall Street's freaking out over this situation because they're like, oh my gosh, the guide, it's not that great. Well, still, it's actually really great. 1.2 billion plus when they did just over $1 billion this past year. 2, what did Elf do last year? Think logically. Think logically for a second, Wall Streeters. I know you can't really do it, but you should try to think logically. What did Elf do last year? They came in with a low guide. People freaked out. Oh my God. And what happened? Elf came in and crushed it through the year. They came in and crushed it. as they just did this past quarter. They crushed their numbers and estimates again. So what do? They give a low guide out there, something they know they're going to be able to come throughout the year, smash it. Maybe in a couple quarters from now, they go and up their entire fiscal year 2025 outlook, right? These guys understand the game. Do you think we got to a 2,000% gain just by accident? No, these guys understand the game. One, they understand how to run a company great, which they've done an exceptional job over the past 5-6 years doing that. Two, they understand the game of Wall Street. You put out guides, sandbag a little bit, then you come in throughout the year, beat your numbers, beat your revenue, beat your earnings per share, up your fiscal year numbers 2 quarters into the year. They understand the whole damn game. That's how you get a 2,000+% gain. It's got to be the great numbers along with the game of Wall Street. 5 minutes till Nvidia earnings come out, by the way. 5 minutes, folks, 5 minutes. So anybody that sells this stock after hours, any of these Wall Streeters, they're like, I'm going to sell my shares for 138. These are the same people that are going to be buying the stock back for 200. They're the same exact people. They're the same people. If we go to earnings summary here, okay, this is valuable. So keep in mind, this quarter they just posted, they crushed it. They crushed their EPS, they crushed it on revenue, right? Then the previous quarter, what did they do? Crush EPS, crush revenue. What about the previous quarter? Crush, crush. What about the previous quarter? Crush, crush. Previous quarter, crush, crush. Previous quarter, crush, crush. Previous quarter, crush, crush. Like I said, these same people that are going to sell off Elf stock, the same people that will be buying it back at 200 plus. Same people.
And I will note that Nvidia is actually out. We're going through those numbers right now.
Ooh.
Okay, you want me to answer or just wait for the video?
Answer. We're looking, but you got to answer.
Yeah. No, I think, in terms of the economy, and it is economy and earnings that drive the stock market, it's not going to be significant. I think in the short run, because mega caps and Nvidia have led this market pretty much up until recently when it is broadening out, it'll have a big impact, but I think it'll be short-lived. And I think whatever it is going to be probably about duration and durability, of their earnings growth. And that's really an Nvidia-related and hardware-related thing and how quickly it spreads out to other. So even if there's a dislocation after we go through these numbers, I think it will likely be short-lived as people digest whatever it is that we're digesting right now.
Well, yeah, I mean, we're going to get
It's going to hit 1,000. I got to grab a screenshot.
Momentarily.
But shares are shooting higher in the meantime.
Christina, how does it look?
Bottom line, $6.12, which is a beat for Q1 revenues of $26.04 billion. So stronger than the estimate. Also matching the boogie number, the whisper number at $26 billion. And I'd like to point out so far with data center revenue, also a beat, $22.6 billion, higher than what the street was anticipating. And I'm going through the report, but one line stands out. The next industrial revolution has become, and they're going on about talking about the data center growth fueled by strong and accelerating demand for Gen AI, as we know. So we'll get back to you on all their numbers, but top and bottom line beat so far.
All right. So Patrick Moorhead, I want to go back to you on this. We got a 10. Go ahead.
And a 10-for-1 stock split that I just read right now. Also announcing a 10-for-1 forward stock split of common stock to make ownership more accessible.
Who called that? Somebody in the chat called that.
The split will be effective through an amendment to NVIDIA's restated, scan through June 6th. So as of the close on Thursday, June 6th, they'll get 9 additional shares of common stock. So again, 10-for-1 forward stock split at the close on June 6th.
Whoa.
All right, Christina Partsinevelos, thanks for bringing us those initial headlines. Patrick, I'm going to go back to you. Data center beat $22.6 billion, higher than expectations. Revenue overall, higher than expectations, or at least it seems like meeting the whisper number. I mean, we went...
Hey, who called it in the chat? Somebody called that stock split. Who knew? Who had the inside information? Who had it? Somebody had it.
143% plus revenue growth. We've just topped that. How does it speak to what you were saying to us earlier about where we are in this cycle?
Yeah, so it aligns perfectly with what I said, which is the demand is off the rails in the hyperscalers, and they just want more.
We're going to go through the numbers in depth here in just a moment.
Upcoming platform, Blackwell, which isn't shipping yet, but will ship. And that demand is now going to the data centers that aren't necessarily connected to the hyperscalers.
It's getting close to 1,000.
Like Lenovo, Dell, and HPE, and Cisco. And so this increased insatiable demand to work on generative AI models continues, and I believe it will continue at least for the next year.
Once it hits over 1,000, rocket ship.
Scrambling on that news as it was crossing. Barbara, and I want to go to you now. NVIDIA's close to being a $1,000 a share stock right now after market. Shareholders of record as of Thursday, June 6th, are going to get 9 additional shares of common stock. We'll actually see the split adjusted price reflected Monday, June 10th. How does this make you feel about being a long-term holder of this stock, and given the accessibility that stock splits normally give to shareholders, does that factor in at all? Or given that, Robinhood and SoFi and like all of these fractional shares are common right now, does it not matter as much as it used to?
Well, actually, I think it does still matter. It shouldn't, arithmetically, but it does. I mean, it does open up to a lot of retail investors who, if they could afford 2 shares, it doesn't seem worth it. So I think that is delightful news, that they're on top of the good fundamental news. And also what I think you're seeing in the aftermarket right here, there's a lot of momentum traders. There's a lot of trading going on. And I think tomorrow when the market opens, you're going to see a lot of retail traders, leaping aboard. 10-for-1 stock split like you had with Chipotle. They announced what was it, 50 to 1? And in that stock just, kept moving ahead, even though it's expensive. After their earnings, they announced the stock split. It was very positive for the name. So I think this will be too.
Okay, I want to bring Mike Santoli into this conversation. I mean, we're starting to see some of the other AI plays trade higher in sympathy right now as I go through. Even Intel's up fractionally, AMD, Supermicro is trading
up
higher,
1%.
Mike. But just to go back to the stock split, what does this do to make NVIDIA now a contender for the Dow?
It obviously would put it in the zone if the Dow committee were so inclined to try and add another company of this size. It's pretty conspicuous how big it is and not being part of the Dow. I don't know that that's necessarily something either that's the motivation of NVIDIA or that they're necessarily seeing getting itchy to do. They just recently added Amazon. I'm sure they feel as if they're participating enough in that. To me, it's more just a soft gesture of management confidence on some level, and then you take them for their word that for employees, it actually does matter. If you're compensated to a large degree in shares, it matters if you can just peel off small bits of it and sell some into the market. Walmart did something similar on that basis too. So to me, it's more of a little enhancement to the overall story. The fact that the stock is only up 4%, I also would, strangely enough, take as a positive because it shows a certain level of maturity and predictability. The forward guidance looks okay. Now, who knows? They could say wonderful things or scary things on the call and gets the stock moving in a different direction. But I think that's a pretty good thing to hold the recent gains up 4%. And what really has happened to the market based on this huge AI boom that's being funneled through NVIDIA largely is that all the companies buying from NVIDIA, right? So it's Microsoft, it's Amazon, it's Meta, it's Alphabet.
Okay, so very important to understand where are those NVIDIA results. Here they are. The quarterly revenue number, okay? If you look on a sequential basis, they're still growing very nicely, up 18% from the Q4 number. So it's not just that they're growing massively on a year-over-year basis, it's that they're growing very nicely on a quarter-over-quarter basis, on a sequential basis. Now, people will get worried and get scared about NVIDIA stock. They're going to get worried and they're going to get scared about NVIDIA stock when the sequential growth comes to a standstill or starts going down. That's the moment people are going to actually start selling the stock off, and you'll actually see real downward momentum. Until you get on a sequential basis, the growth to stall out or start going down, at the end of the day, it's going higher. People are going to want to continue to own the stock and own the stock. Like, let's say this had like 2% growth on a quarter-over-quarter basis, 1%, or let's say it even went negative, NVIDIA would be down massively right now. The stock would be trading 750, 725, something like that. But until this stops, the sequential growth, people are going to have to continue to own the stock more and more and more. Okay, that's important to understand. If you're wondering, like, when does the train end here? Like, when does this, like, the whole story fall apart? It's when that number starts basically being flattish or very slight growth or goes negative. That's when everybody's going to jump out of this one. But for now, 18% quarter-over-quarter growth, you can't move out of the stock. You got to buy it up if you're Wall Street. Record quarterly data center revenue, $22.6 billion, up 23%. That's another one that's very important. It's not just about the revenue overall from a sequential basis, but what about data center specific? That's AI chips. Think about that, okay? The 10-for-1 stock split, that's big. Obviously, we know that, right? Quarterly cash dividend raised 150% to 1 cent. Oh, on a post-split basis, wow, big deal. Like the dividend yield is so small on Nvidia, you might as well not even pay it, just to be honest. I mean, it's insane. The next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence, said Jensen Huang, the founder and CEO of Nvidia. AI will bring significant productivity gains to nearly every industry to help companies be more cost and energy efficient while expanding revenue opportunities. Our data center growth was fueled by strong and accelerating, that's a key word there, folks, accelerating demand for generative AI training and inference on the Hopper platform. Beyond cloud service providers, generative AI has expanded to consumer internet companies, in enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets. We are poised for the next wave of growth. The Blackwell platform, this is their new chip that's like $40,000 or so that they're going to start selling in the back half of this year, and then it's going to be big for the company in 2025. Is in full production and forms the foundation for trillion parameter scale generative AI. Spectrum X opens a brand new market for us to bring large scale AI and Ethernet only data centers. And Nvidia NIM is our new software offering that delivers enterprise grade optimized generative AI to run CUDA everywhere. That's our software. From the cloud to on-prem data centers to RTX AI PCs through our extensive network of ecosystem partners. NVIDIA announced, obviously, the 10-to-1 stock split we just spoke about. So they're talking about each shareholder. So if you're a shareholder by June 6th, you'll be part of that stock split, obviously, right? You'll receive an extra 9 additional shares. I mean, at the end of the day, it doesn't really matter other than the stock price is going to be cheaper and people are going to have more shares. But it all ends up equaling out in the end. But it could attract a lot more folks to own NVIDIA stock because now the share price will go down to $100. Let's say NVIDIA's $1,050 or something like that. Come stock split time, well then the shares should be like $100. Would that be $105 or something like that, right? Or $100.50? Yeah, $100.50, something like that. So $100 something, which, to some retail investors, that really matters, right? It also could matter for the options market a little bit, cheaper options. So another thing to kind of factor in there. NVIDIA is increasing its quarterly cash dividend by 150%. Okay. So these numbers are phenomenal. Look at the gross margin. You'll be flipping my flapjacks, folks. 78.4% gross margin? No way. That's insane. Oh my gosh. Operating income nearly $17 billion. Net income nearly $15 billion in that quarter. These numbers are exceptional.
Color cosmetics, skincare, and international.
This is a sick presentation.
Let me update you on our progress in Q4.
Look at this.
In color cosmetics,
I've never seen this
continue
before.
to significantly outperform the category. In Q4, Elf Cosmetics grew 30% in tracked channels as compared to a category that was down 3%.
Freaking go.
We grew our share 325 basis points, driving our brand rankings to new highs. On a dollar share basis, we achieved the number 2 rank for the first time as compared to the number 3 brand a year ago.
See, Elf's ready to just expand huge international over this next 5 years. And the reason being, one, low price points. So they have low price points, right? So, even in, let's call it markets where there might not be as much money out there, like, let's say Mexico, right? Huge. And secondly, the social, their success on social media, right? Their success on social media expands all over the world. TikTok goes all over the world. Instagram goes all over the world, right? And so that's the important thing to understand. Now, look at that stock. I told you guys. I told you 30 minutes ago. I said anybody selling this stock is clownish. Somebody was selling shares at 135. 135. And I'm like, dude, you're insane. Like, these same people that are selling are the same people that are going to be buying back at 200 something. And look at what we've seen play out here. Exactly what I knew was going to play out. Now the stock's trading 151, 152. Don't be surprised if it goes green. Like, it's insane.
Good afternoon. My name is Regina, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's first quarter earnings call. That will conclude our question and answer session and our call for today. We thank you all for joining, and you may now disconnect.
So, a lot going on here, okay? First of all, let me just address a question. Somebody asked about, is this going to help Meta tomorrow? Well, not necessarily. I mean, if the NASDAQ goes up, then it helps Meta, right? But it's not like necessarily anything in the NVIDIA call necessarily helps Meta. All that, the NVIDIA call did a few things, okay? One is it got all the boogeymen out of the room in regards to NVIDIA. All these bearish points about, well, competition. Well, what if people are just hoarding chips? Well, what if, I don't know, like all the boogeymen that these bears come up with, right? And you come up with all these scenarios, and Jensen just basically killed them off one by one by one by one, and they went through every one of the bearish points. They went through every single one, and he destroyed them time after time after time again, right? So, I mean, if you're bearish on NVIDIA, I don't know what you have to go off of. It's not like you really have a valuation case because the forward P is like 40 and the company's growing ridiculously fast. Actually, the forward P is probably under 40 right now in reality. So you don't really have a valuation case to go off of. The whole hoarding of chips doesn't even make sense because these companies need to use every single chip they're getting in their hands. So that got thrown out, that boogeyman. Then there's the boogeyman about, well, what if people aren't going to order the past chips because they're only going to order the future stronger chips? That Jensen threw that boogeyman out. He's like, one where I called it an arms race. He called it a race. I call it an arms race. You gotta stack your weaponry. And that's these chips, and you gotta build. And he also talked about when you're building out these AI factories and you're still in the early innings of that build out, you need to build out as rapidly as possible. You can't wait for the next chip because let's say you want Blackwell. Okay, cool. You can get Blackwell probably at the end of this year, next year, and you're probably going to get it in limited quantities because they've got to distribute it across all their different customer base, right? So, like, that's a whole process to go through. So you need to build now. So if NVIDIA can ship you some H100s, you better get those now. And then you better get your hands on as many as possible, and you better get your hands on as many Blackwells as you possibly can. And you got to pay up. Like, there's no other alternative. Like, I'm going to go use AMD or no. You need these NVIDIA chips. So he killed off that boogeyman as well. He killed off every single boogeyman they have out there that the bear case is about. So if you're bearish, you just don't have anything. You don't have anything to go off of this company. They're still growing rapidly on sequential growth when it comes to margins and revenue. You got nothing.